through with you Manpower stock. Just type it in Google and click enter. You can see the name. Full name is the full name is ManpowerGroup Inc. and the Nasdaq stock is MAN. And you can see the if you want to buy it right now, it is 86.56 US dollar for one stock. It's a billion size firm. It's a big size firm. The dividend yield is 2.52%. Any firm that is paying dividend, that means they are very financially strong, because after paying their creditors loans liabilities, they still have extra money. That extra money it pays to shareholders as dividend. So any firm, if even if it's 1% dividend yield, that's brilliant, because that is extra money. That means firm is financially strong. Let's go to Wikipedia and search this box and see when was this founded. I can see it's founded in 1948, 71 years ago. And let's see what the employees have to say about it. I'll just copy it exactly from Google, paste it here, type in Indeed, reviews, enter, and let's have a look. So I can see 15,500 reviews and 3.8 star, and you can read through the pros and cons yourself. Check out the salaries, the photos, the jobs listed, and the question asked. And check this in Glassdoor as well, because that's very brilliant as well for reviews. And you can see that it's 873 reviews, 3.5 star. Read through the pros and cons yourself. Check out the jobs listed, the salaries they're paying, interview questions, benefits they're giving, and the photos. Let's go to Yahoo Finance and see what key executives are getting as salaries. So I'll just paste it here and I'll click the Nasdaq symbol MAN, and I will click profile, and you can see the sector, industry, and employees. And the best part is that all of their key executive salaries have been shown, so they haven't hidden anything from us. We can see all the information regarding salaries. That's brilliant. Let's go to Justia patents and see if it has any patents or not. So I will just paste it here, and I just want to remove that now. No, enter Manpower. No, I don't think it has any patents. It doesn't appear here. So maybe it doesn't have any patents. But the firm that has patents, that means they are very strong. It's difficult to beat that firm because they're very strong. It acts as a moat. So, but this firm doesn't have any patent. Let's go to macro trend and see the ratios. Let's go to price ratio, price book ratio, and paste in the symbol MAN. And if the price ratio is less than 1, that means stock is cheap. At discount, it's undervalued. If the price book ratio is more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So let's have a look. Okay, so right now it's 1.95, which means stock is 1.95 times more expensive to buy right now. If I just see in 2019 March, it's 1.86 times expensive. You can see vertically up. People who bought in March 2019, they paid $82 to buy something that was $44 worth. They bought it 1.8 times more expensive. Right now, it's 1.95 times more expensive. And in 2017 December, it's 2.85 times more expensive. People who bought that time in 2017 December, they paid $123 to buy something that was $43 worth. I can see that in 2011, it was 6% discount. It was a sale in 2011 September, when people bought it for $29. They paid $29 for something that was $31 worth, so they got 6% off. So right now it's 1.95 times more expensive. Let's go to other ratios. I want to check out current ratio. If current ratio is less than 1, that means stock is risky, because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is very safe. It has a very good margin of safety. So let's have a look. So I can see right now it's 1.46, which means that it's less than 1.5. So the stock is risky. Let's look at the previous trend. Has it ever been 1.5 or more than that? I can see that since 2005 June up till I would say 2011 March, it's a safe stock because it has been 1.5 or more than that, so it's a safe stock in terms of current ratio. But since 2011 June up till now, it's a risky stock because it has always been below 1.5. So since recent 7-8 years, it's a risky stock in terms of current ratio. Let's look at debt equity ratio. This ratio will tell me if the company is mainly operating on debt or equity. Now, I'm looking for 0.5 or less than that for it to be brilliant. So let's have a look. Right now, I'm looking at right now the ratio is 0.5, which is brilliant. We are looking at 0.5 or less than that, so it's a safe stock. But let's look at the previous trend. Has it ever been above 0.5? No. So since 2005 up till now, it has always been 0.5 or lower than that. So it means it's a safe stock in terms of debt equity. That's brilliant. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Right now, I can see that it's more than 8%. That's brilliant. And let's see if it has always been more than 8% or um, so I can see that since 2005 up till I would say 2008 September, it has been 8% or more than that. That's brilliant. And then it became like less than 8% and a negative equity return on equity as well. But since 2011 up till now, it has always been above 8%. So since recent 7 years, it has been giving a very good return on equity, and it's a consistent equity which I'm looking for. So it's 8%. That's brilliant.